A major shakeup in the housing market just got announced, and it was Redfin CEO Glen Kelman who went on national television and said this publicly as the leader of a major tech real estate company. Take a listen.
But we are seeing finally evidence of a real correction where prices are going to come down.
So that would be the first time since the post-2020 era that a major player in the real estate space acknowledged that home prices would be going down in the US. For years, we have heard from the industry that prices were solidified and no crash was anywhere near the horizon. But now with inventory piling up and rates climbing past 7%, the 2025 bubble is finally breaking. And of course, the story isn't really captured by looking at the national data. While we did see a national decline in prices for April for the first time since 2022, there is more to the story than just this tiny decline barely noticeable on the chart. And really, it's a story that is summarized by simply acknowledging the sheer absurdity of today's market. While many people are just going to ignore the evidence, the 2025 housing bubble is the largest in US history. Home prices throughout America in the last 100 years have mostly followed the rate of inflation. That may sound hard to believe, but it was accepted as fact from the 30s to the 2000s. Robert Shiller, arguably the most important real estate researcher of all time, famously showed through his intensive research that when adjusted for inflation, US home prices only increased about 0.4% per year for a near century. It wasn't until 1997 that we saw a deviation from this trend, famously leading to the Great Bubble of 2006 and the Great Recession of 2007. And if you look at a chart of real home prices over the past 100 years, you can see that when accounting for inflation, today's bubble is the largest in history. And we have to ask ourselves, is this just the new normal, or will these trends revert back to the 100-year average as it happened last time in 2007? Today, we're going to look at clear evidence that this is unsustainable and that the biggest real estate bubble in US history is imploding as we speak. Now, before we begin, we need to understand just a bit of history. In the last crash, we proved that there will likely be an imbalance of price movement throughout the nation. Even in the Great Recession, we saw that you can have national prices down 5% year over year, but some cities within the US could be down 20 or 30% year over year at the same exact time. For example, in September of 2007, the national Case-Shiller was down 5% year over year. And now just looking at this chart alone, you might say to yourself, this is nothing, a small correction in a heated market. But as you will see, the national price levels can be deceiving at the start of a crash because at the same exact time, the Miami Case-Shiller was down 27% year over year in an all-out collapse, and the Vegas Case-Shiller was down 21% year over year. This means in multiple markets, people were completely underwater, while on the national scale, it looked like a small bump in the road. Now, today, we are seeing something eerily similar. For example, since June of 2022, a single-family home in the Cleveland suburbs has increased by 14% according to the Zillow Index. A pretty good return for just 3 years of appreciation. At the same time, in Austin, Texas, a typical single-family home has fallen in value by 22%. That is two different worlds. One is resembling a bubble, the other is in the midst of a crash similar in severity to 2007. And that is a common theme between the Northeast, the Midwest, and the South. Across the nation, in places like Texas and Florida, the crash is already in full effect. But to someone in Ohio, this reality isn't being felt. You can get a good sense of just how bad it is by looking at what I think is the best leading indicator in the housing market: new homes. You see, in real estate, it's very hard for existing home sellers to accept a new reality where prices are falling. For example, if for years you heard how all your neighbors sold their houses for these absurd valuations, you tend to believe that your house deserves the same price point irrespective of the market. The seller is rarely out there truly understanding the pulse of the market. They behave in a very human, emotional way regarding what is likely the biggest asset they own. And that human way of behaving comes down to a simple fact. For example, let's say our neighbor John sold his house for $450,000. The common thinking is that my house deserves at least that or more. But little do they know that 6 months ago, when John sold, the market was in a different place. That fact is impossible to accept for many people. This is why price cuts on existing homes take forever. If the sellers are not motivated, they oftentimes just take the house off the market rather than move the price down. Remember, it only takes 1 or 2 buyers to reset valuations for an entire neighborhood. So with that said, the existing market moves like a train when it comes to adjusting to changing macro environments. But new home sellers are very different. These are massive billion-dollar companies like D.R. Horton, Pulte, Lennar, and NVR or Ryan Homes. When their inventory isn't moving, they are quick to cut prices and add incentives. So if you want to look where the market is actually going, you can just take a peek into this sector, and today we see that it's a bloodbath. D.R. Horton stock is down 39%, Pulte 34%, Lennar 40%, and NVR 24%. That is not a coincidence, this is the reality. While a lot of their revenues have remained flat over the past year, the price cuts and incentives to move these new homes is growing by the day, and it's reflected in net income, which shows their profits falling by as much as 30% year over year. If you look at new home prices, which by the way is sort of distorted by other incentives like rate buydowns, the fact is that new home prices have been slowly falling for about 2 years now. In many spots, it's actually cheaper to buy a new home than it is to buy an existing 70-year-old home with 8-foot ceilings, outdated piping, and a kitchen from the 80s. And this reality is a reflection of the human psychology I mentioned earlier. Existing sellers are just unaware. In Florida and Texas, they are learning fast, but in other spots, it's sheer delusion. Take a listen to Redfin CEO Glen Kelman explain.
Welcome back. Take a look at new home sales this morning out, coming in stronger than expected in April. In fact, the highest level we've seen since February 2022. But with mortgage rates on the rise and all the economic uncertainty, can the momentum continue? Let's bring in Redfin CEO Glen Kelman. And Glen, our Diane Olick said it was an anomaly, and we know these numbers can be volatile. What are you saying? Does it jibe with the big surge in new home sales? Also, it came off of a weak March, we should mention.
It's somewhat anomalous, but it is a fact that builders are competing effectively against people selling existing homes. Whenever the market is changing, and it is changing right now, where home prices are softening, it's taking more than 40 days to sell a property, builders are usually the first ones to aggressively lower prices. And so that reaction has allowed the builders to tick ahead. I don't know if it can be sustained long term, but definitely we have seen builders compete more effectively than the traditional sellers of homes.
What is the overall market telling you just in terms of demand? I get that it's competitive and the new builders are competing, but what does demand overall look like with mortgage rates back at 7%?
There has been a real shift. So home buyers over the past few years shook off rate increases. Home prices kept rising. We anticipate that prices will fall at least 1% in the second half of 2025. And when you compare that to 4% wage growth, it means that finally home buyers may be in a position to catch a break, but it has been very hard to put deals together over the past few months, and that is because sellers still have higher expectations from previous years, and the buyers are now standing back. Some of that is macroeconomic anxiety. 1 in 4 Americans right now say they are canceling or deferring plans to buy a car or a house because they're so worried about the economy. But we are seeing finally evidence of a real correction where prices are going to come down.
So there you have the CEO essentially reiterating these points. Clearly the stock market is pointing us in the right direction. These new builders are showing you that the market is falling, and it's not a random anomaly that the 4 biggest home builders in the nation are dropping off a cliff on Wall Street. This fact is already being felt in the softer markets like Texas and Florida, but it's rapidly spreading to the rest of the nation as well. While national prices may not be reflective of this just yet, specific markets are flashing red, and very soon you could have a scenario where prices sort of catch up to what has already been happening in the new home market. To a lot of people, this is a sign that the 2025 housing bubble is finally coming to an end. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it, and let me know what you're seeing in your local market in the comments below.